Hey folks, Dan Bird for the Daily Scan here on November the 5th, Wednesday. Just 3 trading days into the best 3 months of the year. So after a slight sell-off, is buying the dip going to work again? Market looks like it's trying to make a comeback today, but let's see if it's going to continue. Let's take a look and see what's happening. I'm not a financial advisor, so this is for educational purposes only. And let's take a look right now. It is 11:05 a.m. on the East Coast. So the market's been open for about an hour and a half now. Let's see what's going on. Looking at the 10-minute chart of the S&P. See there, trying to make a comeback, hitting the moving average. We'll see if it can break through. We got to close this gap from yesterday. So this is the yesterday's open. So a little reaction rally today. Hopefully we can continue to go higher. Money flow looks a little anemic still up here. Technology also trying to come back a little bit. Discretionary is down and communications services is flat. So the aggressive sectors aren't really perking up much. Neither are the defensive sectors, though. They're actually moving down slightly. So not much rotation anywhere. Cyclicals, financials are flat, healthcare is moving down, industrial, everything's flat except for energy. Energy is the only one that looks like might be trying to make a run. But overall, the market pretty flat, pretty lackadaisical today, not much going on. Trying to make a little bit of a comeback, but not really succeeding too much yet. Growth versus value is pretty much flat. Discretionary, technology, you can see starting to come back. Semiconductors, though, the one area that looks pretty good, actually. And transports versus industrials has been moving higher. So this is positive from a Dow perspective, that transports have continued to move higher versus the industrials. But everything else looks like not much is going on. So breadth still below the 50% level on the 20 and the 50. And bullish percent index is still down, kind of flattening out a little bit. But none of these are really giving me a lot of hope that we're going to see a big, huge rally. But even if we just move sideways for a little bit and then rally, that would be okay too. Russell 2000, not much happening there either. The mid caps and small caps started to make a little bit of a run at first towards the end of the day yesterday, and now they're pretty much rolling over too. So small caps, it doesn't look like the place to be right now. Breadth for the mid caps, all of them still below the 50% level. Small caps, same thing, all below the 50% level. And the NASDAQ 100 trying to make a move higher. Advancers minus decliners actually looks pretty good. It's well above zero, so that's a good indicator. And the volume, up volume minus down volume, is positive as well. And the VIX is down. So all of these things are actually good for the market, good for NASDAQ especially. It's sitting right at 17. So overall, I mean, I think this was just a normal pullback that we had, probably a healthy one for that matter. Let's go over and take a look at the daily charts using the market bias page. And we'll look at the S&P right here. I updated these this morning, so you can see the gamma flip line is down here, and the put and call walls. So we're sitting right on the 21. I talked about this yesterday. Right on the 21, that's the point where we would like to see something reverse and go higher. It also happens to be the support line. So it was where resistance came in back here in October. Market went down, came back up, and then broke resistance, and that now becomes support. And that's exactly where we are. We're sitting on the support line and the 21 both at the same place. So this is the natural place for the market to start to move higher and maybe get that buy the dip. So maybe that buy the dip will work. You can see down here, VIX starting to move down again. So that all actually looks pretty good. Let's look at the NASDAQ 100. See what that looks like. Very similar, right on the 21, right on a Fibonacci level. So this could be the place where we get the reversal to start to move back up. Hopefully, and we need to get confirmation that that's going to happen. So I'm not saying that is going to happen. I'm just saying right now, it looks like the buy the dippers are stepping in. And then, of course, let's look at Bitcoin, see what that's doing. Bitcoin today, actually, I talked about it yesterday, hit right here on this Fibonacci level. This is the 61.8 level and reversed yesterday, came down and touched it almost to the tick today and reversed again. And now we have so far today, we have a hammer candle. That is a bullish reversal candle. So Bitcoin may also be ready to reverse and start to head higher. It's in a squeeze right now, so it would be very positive to see that go back up. It needs to get above this previous support line. We don't want to see that become resistance now. But that is really the key, which is at about 108, I believe. Let's look. So we're at 103.5 right now. It actually went below 100 yesterday, which I actually talked about that it would probably do that. 107.250 is where the key resistance line is. So we need to get back above that. And then, of course, the 21 is at 109. So both of those are important levels to try to get back above, especially for Bitcoin and the rest of the market as well. All right, let's take a look at the dashboard. And as you can see, the Dow came right back down to the open. There's not really a big, huge push. S&P is up less than 0.5%. NASDAQ 100 up a little more than 0.5%. The VIX, of course, is dropping nicely, so that is a good sign. The VIX is going down. Bonds, the 10-year is up. Commodities, gold is up. Let's look at the chart for gold. You can see here on the daily, it's sitting right back at the 21 EMA. So that is a key level that gold needs to get through. You can see the parabolic move, and I said that that is not sustainable and it's pulling back now. A healthy pullback would be back here to the 21 at about 340. This is for GLD or 3,400. That would be a healthy pullback, just like it did here, just like it did here, here, all of these times. Pull back right there. And then I got very extended beyond the 21. That's what I mean by parabolic. So I wouldn't be surprised to see it come back down a little bit more than where it is, or it could go sideways and the 21 could catch up to it. That could happen as well. Right now, it looks okay, though, for today. So overall, everything in the market is looking okay. Let's go back and take a look at this again. Notice everything's red. So large cap growth is the biggest loser for today. And the biggest winner is large cap value. I'm going to talk about large cap value in a minute here. Energy, as I mentioned before, is the number one sector moving up. Technology is number two, though. So technology moved from the bottom up to the top today. And then the bottom one, consumer staples, continuing to go down. So I showed that chart yesterday with consumer staples over 25 years. And a big extended downtrend happens when this one moves up considerably, especially as over the course of a month. That's not happening. It's continuing to go down right now. Real estate is the other defensive sector. It's at the bottom as well. So all of this looks like it might be actually pretty positive overall. Here's the 3-month S&P 500. You can see Eli Lilly is right here. 1, 2, 3, 4, number 6 out of 500 right now. It's just been having a great run, moving up again today, up another 4% today. And for earnings calendar, ARM Holdings reports after the close today, DoorDash, Qualcomm after the close today, Airbnb is tomorrow, Monster Beverage is tomorrow. What else do we have? NVIDIA is on the 19th. Cisco is on the 12th. And Palo Alto Networks is on the 19th. So week after next is going to be a big week as well for earnings. So on the industry groups, renewable energy is the big winner. And over here, these are my momentum lists. Notice this one right here, Wriggle, actually, RIGL. This actually, I noticed, came in on my alerts today as a short squeeze alert. So this is a short squeeze. It looked a lot better this morning. It's pulling back and now has a shooting star candle. So you always have to be careful of these. It's not going to have a true short squeeze until it breaks out up here above 42.50. But today it's at 36.50. So starting to break out with big volume. So keep an eye on this. This is one of the short stocks with more than 20% of its float is short. So it's starting to move right now. Be a good one to keep an eye on. All right, if we go back to the dashboard, you can see it was number 2 in my momentum list. Lemonade is also a short squeeze stock. It was up 27% today. This is just today. Solar Edge, which is in the renewable energy group, up 20%. Here's Zeta, up 14, almost 15% for Zeta. That's looking like a pretty good reversal on Zeta today. Cipher, I talked about Cipher. Oop, it just dropped down a little bit. Fubo is up. Interestingly, on Fubo, there is a business partnership issue going on between Disney and Google right now, where Disney removed all of the Disney content off of YouTube TV. So all of the customers that have YouTube TV, including me, could not get access to ABC to watch some of our favorite shows. That included ESPN, and started on October 31st, which is Friday. So a lot of the sports, and especially college football, over the weekend, they've got a lot of very upset customers, YouTube TV does. So one thing that I've noticed, and I actually cancel YouTube TV because I don't want them holding me hostage when things like this happen. And I'm looking now at Hulu instead, coincidentally owned by Disney. So that whole issue, that battle that they're having, may end up backfiring on Google. And the other one that a lot of people are looking at, their Cipher just popped back up in the top 10. Another one that a lot of people are looking at is Fubo. So Fubo actually might end up being the beneficiary of that whole spat between YouTube TV, which is Google, and Disney with ABC and ESPN. Keep an eye on that. Fubo is the one that actually might end up benefiting as a result of that. NXT is on here. HIMS is in the second group, top 10 list after a big downtrend starting to recover. Micron, I've talked about in the past. That one's continuing to move up 8% today. Let's see what else. Qubits, so there's a quantum stock that's on here. Marvell, I think, reports in another week or so. It's up 6% today. On the downside, see if anything of interest. Pinterest is the biggest loser today, down 21%. They probably reported. So they're down 21% today. Upstart down 14%. Let's go one more down. SMCI down 8.5%. Arista Networks down 7%. That's one of the large cap tech names. So here's NVTS that we talked about before as well. It's down another almost 5% today. So it was down yesterday and it's down again today. That's continuing to head lower. And here's what the three charts side by side look like. So you can see S&P bouncing off the 21, Russell 2000 bouncing off the 50, but it does not look as good. It's got to make it back through the 21 up here. And then, of course, Bitcoin now creating what's called a pincher bottom. You can see it looks like little pincers down here, almost at exactly the same place. So this could be a clear reversal right here for Bitcoin, especially if it maintains this hammer candle. The fact that it went right down to almost the exact same spot as yesterday, and that particular spot happened to be a Fibonacci level, I think that this is all good signs that Bitcoin probably is reversing right here, starting to head back up. Bitcoin is a proxy for the rest of the market, so this is a risk-on trade. If Bitcoin recovers like that, then the rest of the market probably will as well. So buy the dip might be the right thing to do. All right, let's go back. What else? If there's anything else on the dashboard, I think that's it. The one thing that I want to talk about, somebody talked yesterday or asked me, can you can you talk about or create a scan for large cap stocks that are below their 200-day moving average and might be good names? So I'm going to show you how to create the scan. Here's what I did. First up here is type as stock. That's just a generic thing to get things started. You can do that under ticker properties right here. Just click on type, add, and it will add that for you. Type as stock and then take out the and because it's starting the whole thing at the very beginning. So that's how I started it off. Second line says close is less than the simple moving average of the 200-day. So these are all stocks that are less than their 200-day moving average. Now the next two lines are, I take those from my relative strength scan, and I'm really just using the first one. So I'm looking for, out of all of these stocks that are below the 200-day, I want the ones that are outperforming their own industry group. So this says relative percentage over 65 days, which is a quarter, versus its industry group is greater than 0, which means it is outperforming its own industry, its own peers over the last quarter. That's what that line means. You can also do it versus the S&P, but I'm just going to leave it at that for now, and then we'll bring in the large cap stocks. But let me show you how many we get if we run this particular scan. So running it that way, I get 527 names. That's way too many to sift through, and we've got all kinds in here. You can see large cap, small cap, mid cap, all kinds of things over there. So what I want is just the large cap stocks. So I'm going to add a line in here. Down here under indexes, I'm going to add the S&P 100. Those are all large cap. And I'm going to add in the NASDAQ 100. Also all large cap tech names. So now I'm looking for stocks with a close below the 200, outperforming their own industry group, and they're in the S&P 100. Now, if I leave it like this, then they have to be in both. And I'll try it with this, but I actually want or. But let's see what happens if I say it has to be in both the S&P 100 and the NASDAQ 100. If I run it that way, I only get 2 stocks. So Costco and Lindy. So those 2 stocks right there are large cap names, less than their 200-day, outperforming their own industry group. So those are probably good ones to take a look at. But let's see what happens if I make this or instead of and. So now it can be in both groups. And whenever you add an or, you have to put brackets around your or statement so it knows what it's comparing to. So now it says the S&P 100 or the NASDAQ 100. Now let's see what I get. All right, in this case, 19. So now I have 19 stocks. You can see the names. Colgate, Berkshire Hathaway, Costco came up again. Salesforce is in there, Home Depot, Lowe's. So these are all, there's Altria Group, Nike, AT&T. So these are all, there's United Healthcare. These are all good names. Large cap stocks, you can see over here, they're all large cap. Less than their 200-day moving average, but outperforming their own industry group. By the way, if I said, just tell me, I don't care about the industry group, just tell me the ones that are outperforming the S&P. I can do it that way as well. And interestingly, there's only 3: UPS, Vertex, and United Healthcare. Those are the only 3 that are outperforming the S&P. So you can look at it that way as well. Or again, I could make this, if I do them both, then there might not be anything. But I can make this an or as well. So they can be outperforming either one. And now I've got 21 names. They're all the same names in there. All right, so those are the good list of 21 large cap stocks, less than their 200-day. I'm going to save this to a scan dump. This is the way that I just dump it all into one chart list so I can massage the data and look at it different ways. So now everything is in this one scan dump right here. And I can use my default chart like this, or I can use This one right here, let's see, one of these, I think it might be this one. Yeah, this one here actually shows you the relationship with its industry group right down here and with the S&P down at the bottom. So, and I said over 65 days. So this is actually 4 months. We do it 3 months like that. So the scan said 65 days, so that's 3 months or 1/4. So now you can see right here that it's outperforming its peer group. It's above the 0% line over that period of time. So here's the accumulation distribution. So this is a way that you can look at each one of these. Now, since this is the chart that I want to use, I can come down here and say apply this chart style to all the ones in the list that I'm looking at. And now, now I can just step through them all and we'll have the same chart style. Make it so you can see both the industry and the S&P right there. And we'll just look at each one. There's Berkshire Hathaway. Notice down here, outperforming its peer group. And if it's above 0 down here, the red one, then it's also outperforming the S&P. But the thing to look at is what does the chart look like? What are the candles or the bars? We've got 2 green bars. It's above the 21 right now. So that's the way as you go through this list of 21 names, you can see the ones that might be interesting to take a look at right now. So go back to Accenture. Accenture has a red bar. They should all be above 0 because that's what the scan said. But you can also see how it's doing versus the S&P down here. All right, so Berkshire actually looks pretty good. Also take a notice the accumulation distribution. So Colgate is heading down. Accumulation distribution, it's outperforming its peer group by 7.5%, so that's good. But overall, the chart is still heading lower. Costco, green bars above the 21. Accumulation distribution going up. Costco is a good name. Copart, accumulation distribution going down. It's got a red bar. That's probably not a good one. There's Salesforce. Salesforce has a red bar and accumulation is rolling over. So I would say Salesforce the jury's out on that one. GE Healthcare, red bars heading down. Accumulations is perking up though. Home Depot, accumulation distribution just starting to move higher, but it's got a big red bar below the 21. So I think the biggest thing is just watch to see if it's above its 21-day EMA. Here's Lindy right there. That's definitely continuing to go lower. Here's Lowe's, big red candle below the 21. Melly, this has a red candle right at the 21, and accumulation distribution is trending lower. So probably not a good one. Here's Altria. That's definitely in a downtrend. Nike, that's way down. So some of these you might want to just take a try on them because they are down so much. They're outperforming its industry group, but it's still continuing a downtrend. Procter & Gamble, Philip Morris, it's like starting to make a comeback. AT&T right there, 4.5% yield on AT&T. United Healthcare, we talked about, it's outperforming both the S&P and its own industry group, but red candles below the 21. So you want to see this start to make a turn to move higher. UPS had a nice gap up right here that looked like 1028 was earnings. That might have been earnings back there. But it's heading lower right now. And then Vertex, the last one, outperforming both its industry group and the S&P and above the 21. So that's the way to scan for these. There's Verizon is also in the list, and Workday, the last one, red bar. So these are the ones that you can put in a watch list and then decide whether you want to buy it because they're good companies that are already at their lows, or they're good companies starting to make another high. You can see with Accenture, it's making higher lows now. So it's reversing its character, starting to become more bullish. But that's the way to do it. So that's how I would create a scan to find stocks like that, to see what they're doing. All right, so before I close, it is now about 11:30, so we've been going for about 30 minutes, amazingly. But let's look real quick and see what the market's doing in the last 30 minutes. Starting to make a comeback. So big green bar right now on the S&P. And on the Russell, there's a green bar on the Russell too, sitting right at the, it's a very important area, this consolidation area. So we want to see it break through for the Russell, break through about 245 to start to move higher, 243 for sure. But it's looks like everything right now is just consolidating sideways. The NASDAQ 100, the VIX had a little pop back up, but starting to head lower again. So we'll see what happens by the end of the day. So maybe this is a buy the dip. The S&P is moving higher. I'm watching it in real time, and it's still continuing to go up. So it looks pretty good right now. So we'll see how things close the day out. So thanks for watching. Hope you enjoyed the Technical Tuesday that I did yesterday. I'm going to put that in the playlist if you want to take a look at all the other ones that I've done in the past. And let me know if there's anything you'd like me to take a look at. Thanks for watching, and I will talk to you later. Take care.